Toronto is facing what some people are now calling it a perfect storm. Today we are going to break it down and find out why sales just hit a 3-decade low and what could happen next. But before that, please make sure to subscribe to my channel in order to support me to create more content like this for you. And if you need to book a meeting with me, use the link down in the description. Now let's dive in. First, the numbers. In May 2025, the Toronto Real Estate Board reported just 6,244 home sales across the Greater Toronto Area. That's a drop of 13.3% compared to May 2024. And aside from the pandemic shutdowns, it is the slowest May the market has ever seen since 1990s. In other words, we haven't seen a spring this sluggish in more than 30 years. And yes, sales did rise about 11.7% compared to April of this year, but that's typical for seasonality. The real story is the year-over-year slump. So now you might ask, what about interest rates? The Bank of Canada has been cutting rates since mid-2024. They've dropped the benchmark rate by 2.25%. That brings us to today's overnight lending rate at 2.75%. But at their latest meeting, just this week, the bank chose to hold rates steady. Reason? Stubborn inflation and economic uncertainty is what basically they said. So while rates are far lower than they were at their peak, we are not seeing the big wave of buyers' demand many were expecting. Meanwhile, on the other hand, the inventory is piling up. At the end of May 2025, there were slightly short than 31,000 active listings across the GTA housing market. So that's 41.5%, closer to 42% increase compared to this time last year. In fact, it is the highest housing inventory Toronto has seen in nearly 25 years. And with more supply, buyers now have more options and more negotiating power. Just so you know, we are currently standing at 4.9 months of inventory, literally 5 months of inventory, which puts us in the buyer's market zone. So you might be wondering what's happening to the prices. The average selling price across the GTA in May was $1,120,000. That's down about 4% year over year compared to May last year. But it is actually up 1.2% compared to the previous month, April 2025. The MLS benchmark price, which tracks typical home values, was $992,800. That's also up slightly by 0.1%. It's nothing, I know, but that was the first increase we have seen since late 2024. Now let's talk about different segments of the market. We're gonna start with detached homes. In May, detached home sales were down 10.6% year over year, with just under 3,000 transactions across the GTA. When it comes to condos, this is where the pain is really showing. The condo sales were down a massive 25.1% compared to May 2024. And downtown condo prices, they're now falling about 16% from their pandemic peak. The average condo price in the 416 area, basically last month, was $709,000. Semis and townhouses were a little bit different. These segments are holding up a little better, more or less stable, let's call it stable. Although they still feel downward pressure in those basically segments as well. So what are the factors contributing to the current market condition? The answer is several factors contributed to the current market stagnation. The first one is affordability crisis. High home prices and increased mortgage rates and of course payments have made homeownership unattainable for many despite recent rate cuts by Bank of Canada. The second factor is economic uncertainty, like trade tensions, particularly with the United States, and a softening economy have basically eroded some consumer confidence. The third factor is inventory glut, which is active listings have surged with May 2025 seeing 41.5% year-over-year increase in the inventory level. That's crazy. And that has led to a buyer's market and downward pressure on the prices. So how the government is trying to respond to the current condition? Federally, Ottawa passed the Affordable Housing and Groceries Act, which removes GST from new rental developments to encourage more supply. Locally, Toronto Mayor Olivia Chow just announced a new plan for 14,000 new homes on the waterfront, plus another 7,000 rental units citywide. There are also new tax breaks and incentives for builders who the affordable units. But there's a major problem in the condo sector. Investors' confidence is shaky right now. If you have been following my YouTube channel, you know that pre-construction condo sales have stalled, which is basically choking off financing for new builds. Without these sales, many developers can't move forward, and that could make Toronto's long-term housing shortage even worse. I think people are gonna feel the pinch maybe 4 years or 5 years down the road. So where does this all leave us? Toronto's housing market is now highly segmented and very unpredictable. On the other hand, a strong immigration, tight rental market, and limited new supply could push prices higher in the longer future. But on the other hand, basically economic uncertainty, buyer fatigue, and rising inventory could lead to the further softness in terms of prices. At this point, some analysts are calling for modest price increases over the next year, let's say 2026. Others think prices could slide further, especially if the economy stumbles or if the US-Canada trade tensions gets worsened. Either way, this market is now at a crossroad, in my opinion. So if you're a buyer or a seller, you might be wondering, what should buyers and sellers do right now? For buyers, all I can say is that patience might still pay off. There's more choices than we have seen in years, but timing the bottom is always tricky. In my opinion, when it comes to real estate market, timing the market is more important than timing the market. For sellers, realistic pricing is absolutely crucial in this market. And for investors and developers, caution is the name of the game. What is clear is this: Toronto's housing market is now facing a perfect storm of factors. Whether we get a soft landing or something more turbulent in the next 6 to 12 months, it would be critical for the whole housing market in Toronto. We will be watching and monitoring the market closely, and I will be updating you on a constant basis. I'm Armani, and thank you for watching.